Today on Fear and Greed, the local share market hits a new record high. Prime Minister Anthony Albanese defends his decision to buy a $4.3 million holiday home amid a housing crisis. And Google orders 6 small nuclear reactors to power its data centres. All that plus much more. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Wednesday, the 16th of October 2024. I'm Michael Thompson and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, the local share market hit a record high yesterday as confidence over stimulus in China, slowing inflation in Australia and a soft landing for the US economy, well, it all combined to encourage investors.
Sure has. The S&P ASX 200 hit a record high yesterday of 8,331.7 points. That was in early afternoon trading before finishing at a record close of 8,318 points. The benchmark is up 18% in the past 12 months, so about half of that occurred in November and December last year. Still, 9% in 2024 is a pretty good result. You've given the reasons for the strength in the bourse, and yesterday's push to a new high was mostly about a strong lead-in from Wall Street. If we step back, though, the last 12 months has really been a story of the technology stocks, the big banks, and the real estate companies. Investors love tech companies. 2 of the biggest on the local market, WiseTech Global and Pro Medicus, have more than doubled in value over the past 12 months. The banks have defied all predictions, including a rise yesterday, with all Big Four having an absolute cracking last 12 months, while the likelihood of lower interest rates has helped the real estate investment trusts. Companies like Charter Hall, Goodman Group, Scentre and Stockland are all up between 40 and 70% over the last year. And while the mining stocks have done well recently, over the past year they really haven't done much. In fact, they're flat. The worst performers of all have been the energy companies.
All right, so we've gone through a few of the sectors and you mentioned a few companies. What have been the best performing stocks over the last year?
Well, in a sense, the market's done really well because of the big 4 banks. They move the index more than most because they're the heavyweights in the S&P ASX 200. But in pure share price terms, they're not even in the running. The best performer of the top 200, buy now, pay later group Zipco, which is up 950% over the past 12 months. I reckon 18 months ago, couldn't find a friend.
That is incredible.
Sure is. Intelligent software group Nui fits into that category as well. It was absolutely shunned. It listed in late 2020, had all sorts of management challenges. No one wanted to go near it, tumbled in value. It is up nearly 400% over the past 12 months. It's actually back almost to where it was when it listed in December 2020. The other one worth a mention is Clarity Pharmaceuticals. It uses radiation to target cancers for diagnostic and treatment purposes. It's up 570%. Others to have more than doubled in price over the last year include Sigma Healthcare, Regis Healthcare and Life 360. However, Michael, we should always mention the ones who haven't done so well.
We like to have balance on this show, don't we, Sean?
We do. A bunch of lithium companies have been poor performers. IDP Education, absolute market darling a couple of years ago. It's had a shocker. Nine Entertainment has had a shocker, as has Woodside Energy.
Sean, it seems a perfectly good opportunity right now to mention today's interview that you have coming up after the show. You're speaking with David Talbot, and he is from HSBC Australia, and it is all about investing.
Sure is. They've got their Investors Insights survey out. The big news, I think, from it is that diversification seems a touch out of fashion among many investors, which is actually bad news. We talked to David all about that, about the rules of investing, about how people are investing offshore and what they're doing with their money. It's a fantastic chat if you're interested in investing particularly.
Stick around for that one. It's coming up a bit later on. Was there much corporate news around yesterday, Sean?
Yeah, bits and pieces. Investment platform business Hub24 jumped 2.5% after announcing a record quarterly net inflow of $4 billion. Total funds under administration hit $113 billion, and the company said it's confident it could meet its target of up to $123 billion this financial year. Hub24 actually is one of those companies that have been, I think it's a top 10 best performer over the last 12 months. It's been flying. Ampol announced a $50 million cost-cutting plan to be rolled out next year. It came after the group reported a big drop in quarterly refinery margins as weak demand for some oil products and an outage weighed on the business. Its share price closed down 2%. And Tyro Payments' share price tumbled 13% after the federal government announced that it intends to crack down on debit card surcharges. More of that in a moment.
And what's happening on international markets?
Well, oil prices are lower on the back of a report that Israel may avoid targeting Iran's crude infrastructure. Brent's trading around $75 a barrel. Bitcoin jumped after US Vice President Kamala Harris pledged to support a regulatory framework for cryptocurrencies. Donald Trump's a big fan of cryptos, albeit a fairly recent convert ever since he got a business deal involved in one. And traders were worried that a Harris government in the upcoming election would hurt the sector. That seems to be alleviated by her comments in recent days. I mentioned Wall Street a moment ago. Nvidia's share price continues to do well, hitting a new record yesterday morning Australian time. The company's share price has tripled in the past year, and its market capitalization is now $3.4 trillion US dollars. Apple's at $3.5 trillion, Microsoft's at $3.1 trillion. Otherwise, gold is steady, and the Aussie dollar is buying 67.1 US cents.
All right, Sean, today's newsletter day, the Fear and Greed weekly newsletter comes out every Wednesday. It's coming out in a couple of hours' time. So you're running out of time to head to fearandgreed.com.au, pop your email address in. And Sean, I'm sure we can look forward to some spicy views on a few different topics.
Yeah, I'm running out of time to write it. I think that's also important to note that. Plenty of spicy views, especially the debit card. Yeah, we'll get to the debit card story in a moment, but a little bit about that.
Oh, I'm very excited. Head along to fearandgreed.com.au, pop your email address in, and you will get this hastily written newsletter in just a few hours' time. We'll be back in a moment with the rest of the day's business news. Sean, Labor is looking to outlaw debit card surcharges in a crackdown on consumer fees ahead of the next federal election.
Federal Treasurer Jim Chalmers said consumers shouldn't be punished for using cards or digital payments, and small businesses shouldn't have to pay hefty fees just to get paid themselves. Shoppers pay about $1.5 billion annually on debit and credit card surcharges. Now, the government's not looking at banning surcharges on credit cards, just debit cards. The banks themselves broadly support the move to ban debit surcharging, even though it probably does mean a change for infrastructure. I'm going to say this is a bit of a gripe, and I do talk about it in the newsletter. It really irritates me when I use a debit card. I don't use credit cards anymore, or not much anyway, because I figure better control of my money if I use debit cards. It really irritates me when there's a surcharge on my debit card, because all it is, there's no risk there. It's just a transfer of money from one account to another. Why should I have to pay a surcharge for that?
It makes no sense. It actually doesn't make any sense.
Yeah.
Although, Sean.
Yes.
Are you familiar with the TV show Family Guy?
Go on.
Well, there is an episode there where Peter Griffin, the main character, he gets his own segment on a talk show, and it's, what is it called? What Grinds My Gears? Where he just has a platform to have a little rant about various things. I can just actually picture now, we can create a little image of you as Peter Griffin. And I'm not being particularly complimentary to you.
No, you are not. I don't want to be Peter Griffin, but go on.
I'm sorry, Sean. Clearly, though, back on track. The election isn't too far away, because obviously we've got this crackdown on these surcharges. But there are also media reports about the government wanting to introduce a flat daily fee for all childcare.
It would be part of the government's push for universal childcare and goes against recent recommendations of the Productivity Commission. The AFR is reporting that flat fee options of $10 and $20 are being considered, as is the mechanism for moving from the current subsidy system to flat fees while maintaining capacity. The option would include removing the requirement for parents to look for work or do some training, and I'd imagine would trigger huge demand if it's introduced.
Oh, you'd have to think so. Now, the Prime Minister, Anthony Albanese, and this story got a big run yesterday. He spent the entire day, it seemed, defending his decision to buy a $4.3 million holiday home on the central coast of New South Wales amid a housing crisis for many Australians.
It appears that Prime Minister bought the 4-bedroom, 3-bathroom, 3-carport property in Copacabana in September. Yesterday, he was pretty unapologetic about it, though he added he understood people were struggling. In a press conference in Queensland, he said, and I'm quoting the PM here, Of course, I am much better off as Prime Minister. I earn a good income. I understand that. I also know what it's like to struggle. My mum lived in the one public housing that she was born in for all of her 65 years. Michael, personally, I couldn't give two hoots that he and partner Jodie Hayden bought a home. But it just isn't a very good look, especially when opposition leader Peter Dutton is making inroads on Mr Albanese being out of touch. Yesterday, Peter Dutton said he had no problems with Ms Hayden and Mr Albanese buying somewhere. He was more worried about all the Australians who couldn't afford a house. Dog whistle politics, pretty smart, just a bad look for the Prime Minister, but couldn't give two hoots. Good on him.
No. And look, I mean, the fact is, even kind of characterising it as a holiday home, realistically, is because they are living in the lodge at the moment. So it would be a home for the future, you would think.
In all likelihood, it's their home post-politics, I'm guessing.
Yeah. And now staying in politics, but at a state level, the Minns Labor government in New South Wales is looking to cap rental increases to once a year statewide, and also change the law so that a landlord needs to provide reasonable and sensible reasons for ending a lease.
The move is hoped to provide greater certainty for renters and make it harder for them to be evicted. Current rental laws allow for multiple rent hikes for fixed-term leases of less than 2 years, or when there's a change in the type of lease, such as from periodic to fixed term. Government wants to look after those renters out there.
Australians are being told not to travel to Israel and to leave as soon as possible as hostilities escalate between the Jewish state and its neighbours.
After a drone attack by Hezbollah breached Israel's Iron Dome air defence system, killing 4 soldiers at a military base in northern Israel, the Department of Foreign Affairs and Trade updated its travel advice for Israel. The advice says, "We now advise do not travel to Israel in the occupied Palestinian territories due to the volatile security situation, armed conflict, civil unrest and terrorism. If you're in Israel, you should leave while commercial flights remain available, border crossings are open, and while it's safe to do so." DFAT also warns that the situation could deteriorate quickly with little or no notice, and that could mean airspace closures, flight cancellations, diversions and other travel disruptions.
Yesterday, Sean, you had a really good interview with Stephen Mabb, the chair of the Australian Shareholders Association, about AGMs. And one of the reasons for talking to him yesterday was because Telstra was holding its AGM for its 1 million plus shareholders yesterday. A few interesting things came out of it. New chair Craig Dunn said he would support a sale of Foxtel, and the telco would consider paying shareholders a special dividend.
Yeah, well, it's a fairly quiet affair, to be perfectly honest. But Mr Dunn said the telco understood that News Corp was undertaking a strategic review of the Foxtel business, which could lead to a potential sale, which would include Telstra's 35% stake. He said that would be a sensible decision. According to a report in The Australian, Mr Dunn said Telstra was continuing to focus on its core business. Basically, Foxtel isn't part of the core business. Asked by a shareholder whether that sale would warrant a special dividend for shareholders, Mr Dunn said the telco would consider it, as it had in the past.
Sean, there's a bit of disquiet at ANZ at the moment, with the big bank calling in global consulting group Oliver Wyman to review the culture of its markets unit.
The bank said Oliver Wyman had been engaged to review strengths and areas for improvements in our markets team's culture and risk governance. The appointment of Oliver Wyman follows that of Allens after the law firm was hired to investigate internal complaints about excessive drinking during work hours and bullying, according to a report in the AFR. ANZ's markets unit faces an investigation by the corporate regulator over alleged market manipulation and internal complaints about workplace misconduct that have already led to the departure of 3 traders. Oliver Wyman's appointment was supported by the banking regulator, the Australian Prudential Regulation Authority.
And Crown Melbourne, Sean, now owned by private equity group Blackstone, will pay the Victorian casino regulator $2 million after it allowed 242 self-excluded gamblers to place bets at its casino.
The breaches which occurred between October last year and May this year were detected through monitoring of the casino by the Victorian Gambling and Casino Control Commission. The Commission Chair, Fran Thorne, said the casino had broken its obligation to protect people at risk of gambling harm, and the breaches related to system and control failures rather than a deliberate disregard of regulation. Crown was asked to engage an independent expert to assess the effectiveness of its self-exclusion program, but has already taken some steps to strengthen its controls. Of course, Crown was only granted an unconditional licence to run its casino 7 months ago. Talking about casinos, not that we were at a casino last night, but Michael, you and I and Adam had dinner to chat all things fear and greed, and we raised a glass to George Negus, who died in the past couple of days, aged 82, a founding member of 60 Minutes in Australia, inaugural host of ABC's Foreign Correspondent, an old-fashioned journalist, I'd say. I met him a few times. He was always very giving. To me, I was always a junior journalist, but he was always giving. And I thought, he's a good fella as well.
Yeah, well said. Well said, Sean. Turning to international news. Now, I mentioned this one at the top of the show. Google has ordered 6 to 7 small modular nuclear reactors from Kairos Power, becoming the first tech company to commission new nuclear power plants to provide low-carbon electricity for its very, very energy-hungry data centres. They've got to be energy-hungry if they're ordering their own power plants, Sean.
The tech company had placed an order for small modular nuclear reactors with a total capacity of 500 megawatts, helping Kairos, a 7-year-old startup, to bring its first commercial reactor online by 2030, more by about 2035, according to the FT. Google said it is a landmark agreement in its 15-year clean energy journey. Google's considering options for the power to be fed into the grid or directly connected to the data centres. Last month, Microsoft announced that it would commit to buying 20-year supply of electricity from the mothballed US nuclear power plant 3 Mile Island if its owner, Constellation Energy, restarted the site. Tech companies are increasingly interested in nuclear as a medium-term solution to providing low-carbon electricity to power their data centres. This move by Google, as I mentioned a moment ago, I think is quite extraordinary.
Something else that I find quite extraordinary out of the US, Sean, until a week ago, you couldn't bet in the US on the presidential election. Then all of a sudden, a court victory in Washington opened the market, and the money has just come flooding in, with Donald Trump narrowly favoured over Kamala Harris.
Yeah, so I think it's about 46 cents in the dollar for Kamala Harris, 54 for Donald Trump, though initially it was 49.51. And often I reckon you follow the money. That's probably the best place to go rather than polling. Financial exchange Kalshi, whose court victory opened up the market, is offering institutional investors the opportunity to put as much as $100 million in either Kamala Harris or Donald Trump for a win in November. In the first days since the ban was lifted, more than $12 million has been wagered, and the company is in the process of setting up several institutional players on the platform, according to the FT. The amounts are expected to continue growing as Election Day nears and more traders are attracted to the platform. Would just like to comment, we here in Australia are betting on elections for years.
That's a weird claim to fame there, Sean.
Yeah.
We will bet on anything.
We will.
Pretty much.
We will.
Now, Sean, up next is the Fear and Greed Daily interview. David Talbot from HSBC Australia is your guest.
Yes, all about the Investor Insight survey that HSBC has done. And as we mentioned at the top of the show, a bit about like diversification, going a bit out of fashion. Something to worry about, I think.
Yeah, it's a good one. It is coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And time is running out to sign up for that newsletter. Do that at the website as well. It's coming out in a few hours. Sean, you better get writing.
Let me go, Michael.
Sorry.
I'm going to write right now.
Goodbye. It's Wednesday, the 16th of October, 2024. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.